Some concerns regarding GST by Surajit Das. What is GST? GST is basically the ad valorem sales tax on goods and services with input tax credit. Now the question arises, what is input tax credit? These are the credits which ensures that producers do not pay the tax on the material input cost of production and only pay on the value addition. Therefore, there is no question of payment of tax on already paid tax amount on inputs. This is called the cascading effect. To simplify the tax system, all indirect taxes are subsumed in the GST except custom duty, which are collected by the central government, and the duty on petroleum, electricity, and alcohol, which are levied by the state government. Both center and state government levy GST on the same tax base, that is, central GST and state GST. Final consumer pays IGST, that is, integrated goods and services tax. These rates are decided by the centrally empowered authority GST Council. It constitutes the representatives from the states and it is headed by the finance minister. There have been various claims made by the present and the past government of NDA and UPA regarding GST. Enhanced growth and reduction in inflation. Shifting of tax burden from producers and suppliers to final consumers. Integrate national market. Improve tax compliance. Mitigate cascading effects. Both center and state get the revenue. It is good for both producer and consumer. It is beneficial for the taxpayer and the tax administration. Makes the tax system transparent. But Surajit Das argues that all these claims are irrelevant or not fulfilled to some extent. He points out the degree of inequality. Past 10 years data shows combined revenue collection is 16.5% of GDP, which is lowest in the world. Same rate of GST has to be paid by rich and poor. Thus, incidence of indirect tax would be higher on poor. Thus, increased tax GDP ratio increases inequality in the economy. If tax rate become uniform across the states. Also, states do not have the power to levy tax. Rather, they become merely the tax collecting agents. But if the tax collection is uniform, but still the prices will differ due to transportation cost, marketing cost, places, for example rural, urban, or due to demand. Therefore, the slogan of one country, one market, one tax rate may not be hold. Other argument is shifting burden from producer to consumer. We all know that irrespective of the degree of monopoly or perfect competition, under a per unit excise duty like GST, both producer and consumer would have to share the tax burden given any negative slope demand curve and given any increase in the cost schedule. Next argument is compliance under GST regime. What does compliance means? Compliance is the ratio of actual tax collection to potential tax collection given the tax rate and tax base. It depends on the efficiency of tax administration, tax information network, and on the degree of corruption. Surajit Das argues introduction of GST neither is necessary nor sufficient until corruption reduces, efficiency of tax administration improves, and the tax network expands. The next point is controversy regarding revenue rates. No government like to face losses in the revenue due to tax reforms. Revenue are higher for the industrialized states with large base for excise duty collections. But it is not the same for all the states. Therefore, revenue collection may differ from state to state. Hence, at last, Surjit Das concludes the paper with some policy recommendations. He suggested that emphasis should be put on direct tax to improve the tax GDP ratio for arresting inequality situation from worsening further. States should be given the right to levy SGST, that is State Goods and Services Tax, and the provision for entry tax in order to preserve the fiscal autonomy of the state government. Government should improve growth of the economy, keeping inflation in check. Conscious efforts to improve the tax compliance should be made as GST alone cannot ensure it. If compliance improves, this will automatically leads to reduction in the tax evasion. Thank you.